afternoon. Time to check in on those markets. Shares in Asia were mostly higher as investors continued to monitor market reaction, especially when it comes to the data that we did see coming out of China, looking at the retail and industrial figures. Nonetheless, of course, the mainland Chinese markets were also mixed. Hong Kong's Hang Seng Index higher, 0.7%, or rather lower in the final hour of trade. Looking at European markets, they were cautiously higher, struggling to build on a positive trend seen at the close of trading last week. U.S. equity futures, they were lower, putting Wall Street on track to take a breather after another positive week as traders braced for more big retail earnings. Locally, Thungela Resources, the coal miner spun off from Anglo American, has booked almost 10 billion rand in interim profits as it cashes in on record pricing. And then lender Absa doubling its interim profits. We can have that interview with the group CFO Jason Quinn a little bit later on. But of course, to talk to us about the latest market dynamics, we are joined by Gary Boyson from Rand Swiss. Gary, thank you so much for your time. Given the picture that I've just described, looking at what's happening in Asia and Europe, how's our local markets holding up?
So our local market, it's actually flat at the moment, so not following quite with the same gusto as the European markets this morning. And I think it's just really us feeling the pain in the resource sectors. The resource index down over 1%, and that it makes sense given that miss on Chinese numbers. The idea, we've seen a couple of downgrades coming out of brokers around Chinese GDP growth forecasts, and obviously if China as a massive commodity consumer is slowing down, that is going to impact our resource counters. On the other hand, the industrials and the financial index also making modest gains. So industrial index up around 0.4%, financial index up around the same. So overall the indices, I'd say a mixed bag to say the least. In the currencies though, we are seeing a little bit of risk off playing out. So we've got the local currency against the dollar just weakening slightly out to around 16.37 currently, and that's, I think, as a little bit of fear creeps in ahead of the FOMC minutes later in the week.
So you had Absa releasing their interim figures. What did you make of the company's results?
I think it was very, very solid. So looking at the banks, it beat consensus expectations. So definitely better than the market was expecting. Their headline earnings per share up around 27%, earnings per share up 26%. They also improved their cost to income ratio. That also looking a little bit better. They managed to double their dividend. And I think a lot of this, it's coming from two parts. So on the one part, banks do benefit from rising interest rates. So obviously the higher interest rates are helping just to increase margins at the bank. So if you look at their net interest income from that moved up to around 28 billion. That was an increase of 12%, and that helped by the rising interest rates. On the other hand, I think it's also that the South African economy is potentially in a slightly better shape than everyone expected. So with the big commodity run that we've seen, some of those commodity counters and those commodity companies just doing a little bit better, helping to I suppose, boost GDP growth in South Africa. And what was interesting in their outlook was that they've got a GDP growth forecast for South Africa at 2.3%, which is slightly ahead of the South African Reserve Bank's forecast at around 2%. So they are optimistic on what the economy can do over the next year or so. And if the economy does continue to grow, that will be very good for banking stocks.
So a lot of the times, I think last week we were talking about this rally that we've seen since mid-June, some that has been described as a bear market rally. And then there's this talk around a Fed pivot, especially given some of the inflation numbers we've seen. And I'm wondering whether that Fed pivot is what's actually needed to sustain this rally that we've seen.
I think certainly if we see some action, that will be great. But there has been a lot of hawkish commentary out of Fed speakers, and we're getting a lot more speakers this week as well, around Jerome Powell maybe just overstepping a little bit in the market, getting a little bit too excited about how dovish he was in that meeting around the potential for future interest rate cuts a long way down the line. Most people saying that that's just absolutely not on the cards. Of course, then we got the very, very strong, or at least better than expected consumer price inflation number out of the US. That also just helped to fuel that optimism. And you can see that the market is just so linked to what happens, with the Federal Reserve and with the Federal Reserve's outlook. So that kind of fueled, 4 consecutive weeks of gains. It's helped to trim a lot of the losses for this year. So it has been obviously a very difficult year in equity markets, but you're seeing the all-share index for the year to date only down around 4% currently. S&P 500 only down around 10%. Even the NASDAQ, which was down well over 30% at one point, only down around 16%. So that rally has been very, very strong. But you do get get the sense that it might be a little bit overdone. Just because we've had a nice inflation print and a slightly more dovish, at least Jerome Powell, I don't think our inflation woes are quite over just yet. So maybe the market moving from deeply oversold back to around fair value. If you look at something like the Fear and Greed Index, which is a composite of a whole lot of different sentiment measures, including the volatility index, we're at neutral at the moment. We're at about 50, and it's been a long time since I haven't seen that in extreme fear. So I think market participants definitely settling down, enjoying the rally. Whether we're going back to all-time highs, given the situation that we're in here, given that oil prices are below $100 a barrel, but still significantly elevated, I think maybe a little bit too soon to get too excited.
So because we had Absa and a bunch of others, and we're also seeing trading statements coming through locally from companies that are also set to release their results, are there particular companies, perhaps even one, in the upcoming sort of results calendar that you are anticipating and looking out for?
I think the interesting one. So we've got banks. So we've got Standard Bank reporting on Friday, which I think is going to be interesting. So whenever you look at banking earnings like Absa today, it just gives you a sense of how the underlying economy is performing. And I mean, that's going to be it's critical to every sector in the economy. And another interesting one, I think, is going to be BHP Bulletin tomorrow, which is going to just give us a sense. BHP does have a big oil component, but it's going to give us a sense of just what the company is viewing the resource landscape to be at the moment. Are they going to be deploying more capital? What is the spending looking like? That is obviously crucial for jobs in places like South Africa as well. And just how are the resource companies going to handle the pullback in commodity prices that we've seen so far? So I think BHP Bulletin tomorrow and definitely Standard Bank on Friday.
Before I let you go, you mentioned FOMC minutes. Any other events that you're paying attention to?
Well, there's a couple of international earnings that we'll certainly be keeping a close eye on, something like Home Depot out tomorrow. But I think the big economic numbers, it's a smattering of numbers. We're getting some initial jobless claims on Thursday from the US that might be interesting, just feeding into the narrative. But I think the big one is definitely going to be those minutes, just seeing how the central bank is positioning, get a little bit more clarity into their thinking. I think that's really going to be key for market participants this week.
All right, Gary, let's leave it there. That is Gary Boyson, who's a portfolio manager at Rand Swiss. And we did mention Absa also releasing their earnings, that share price up about 1%. However, before we play that interview for you with Absa CFO Jason Quinn, we're going to take a quick break and we'll come back for that.